Welcome to Markets Now. I'm Michelle Rook with Mark Schultz, Northstar Commodity, a down day in both grain and livestock futures trade on Wednesday. Mark, let's talk about the grain trade in sum total. How much of the pressure was just positioning ahead of the reports versus South American weather versus maybe that higher dollar?
Well, let's start with the what I believe is the first catalyst that moves the market here for the short term, and that is the weather. I do believe you're going to continue to have a crop problem or a weather problem, so to speak, in both Argentina and southern Brazil. They have been in a warmer, drier pattern for about the last 10, maybe 15 days. I don't think you've done much yield damage yet at this time. The forecast looks like it stays warmer, drier coming in for the next 8 to 10 days. And then this morning and even at noon, continue to show indications that the 11 to 15 day outlook would show a much improved rain chances for both Brazil and Argentina. So that will be the one to watch closely. As far as the report itself goes, the trade, most of the estimates are all pointing that we should see just a little bit lower corn production, a little bit lower on the corn carryout, and also the same for the beans, just a slight decline there. So you would have to have something that's more surprisingly of a crop that falls further short of the expectations and fall even a bigger decline in order to move the market to the upside.
To put it in perspective, though, Mark, when you look at what the final ending stocks may be under 1.7 billion bushels on corn, that is a heck of a lot lower than where we started the year at almost 2.7. I mean, we've had a tremendous amount of demand pickup.
Yeah, and I will agree with that. That is a true statement. We have brought this carryout down to 1.7, and the trade's going to look for something maybe 1.65 or 1.68, something like that. The other thing that is also impressive on the carryout is the big decline of world carryout of corn. You're down at 294 million metric tons. If you continue to get a little bit lower on the corn production, and this is why that South American weather is so crucial, because if that goes down, you're at 15 and 20-year lows on the world carryout projections right now for corn. So things globally can get pretty tight in here for the corn market. That at least does indeed have at least a story there to write, and that is the demand has been very good for the corn market.
So quarterly stocks also come out. Again, sometimes that can present a surprise. How do you think we may compare to last year? That's kind of the key here, isn't it?
Yeah, I think we're probably going to be very close, very similar for the corn carryout of this year versus a year ago. So I don't think it changes, maybe 100 million bushels either way. If you're going to get something that's going to be a shockingly bullish scenario, and that would have to be that the corn yield falls maybe 2 bushel per acre, goes back to, say, 181. And then all of a sudden you start talking about carryout that could get down to 1.6 billion bushel. And that would be the way that you would get something that would be a surprise there. That certainly is not a far-fetched situation either. So that does have possibility, because I still think in the upper Midwest, especially in Minnesota, the corn yields are going to go down in the state of Minnesota. Might see it go down in the state of Wisconsin, Iowa. We saw some declines from the previous one, so my guess is it's going to go a little bit lower.
Yeah, and corn's the most likely, just because of the way the spreads act, to maybe get a little bit of a surprise here in terms of quarterly stocks. We also had very dry beans. We took 1.4 bushels per acre off of yield in the last report, but the quarterly stocks are really going to tell us whether those beans were there or not, right?
That's what the quarterly grain stocks should do, is it should give you a stronger idea of whether the crop was indeed as big as it was, or what everybody forecasted, or whether we've got a bigger decline going in here. So those would be the ones that would go in here. And again, if you could bring the bean stocks down to 1.3 billion bushel, I'd say that would probably be friendly as well. That'd be a big surprise to the market. And yes, not only do we have dry beans, we also had dry corn at the very end as well. So that's what you'd have to have, something of that nature to get you a surprise in the market, hopefully of a lower production number to give you a boost to the price to the upside.
So you mentioned South American weather. So what kind of a production loss would we have to have really in South America to even move the needle.
If you're going to do some damage there, that I think you're going to have that heat last well into the 20th, 25th, maybe all the way to February 1st to start talking about losses. And when I talk about losses, I think you're going to have to see something in the neighborhood of 4 to 8 million metric tons off of their crop in both corn and beans. That would be the catalyst that would get you a market that would be a much better, friendlier market for the price.
That seems kind of unlikely at this stage anyways.
It does right now to me, yes.
So the wheat market pressure today, was that all technical selling or was that a function of that higher dollar?
The currency obviously hurts us. It's a dollar index trading 109 per 109, a little over 109. That's 2-year highs. That's not going to get you any new business at this time for that market. So I think the wheat's got to be very critical here. We dipped a new contract lows last week on Chicago wheat. Cash wheat and cash corn in the southern tier states is getting closer to being even with each other. If you start getting wheat 30, 40 cents underneath the price of corn in the cash market, you're likely to start seeing wheat go into some feed rations and at the expense of corn.
Yeah. Cattle market had a pretty good setback on Wednesday. That market overbought. Is this just routine profit taking or not?
Well, it's been on quite a run here for the cattle market, not only in the last 4, 5, 6 days, but it's been on a upward trend now on cattle for 18 weeks. We're into on this market going up. And in that time period, I believe that's a $20 move to the upside. So it's pretty impressive in here of what we've done. The cash market has absolutely been on fire. Futures is, have been going up. Everybody's got all flipped to the bull side. Markets will typically peak out when they're most bullish. Someone has to be careful, but we've already heard $200 cattle being paid all the way to the 1st of February. So my guess is that the futures is right now is a correction. You just simply ran out of buyers and you take some profit taking. Market gets you into correction. Watch the cash market. If it stays steady to firmer, odds would favor the futures are likely. The decline would be limited and probably get pulled a little bit higher.
So the cash market trumps the border reopening to Mexican feeder cattle then, huh?
Yeah, I think the cash market is still the good one. The feeder cattle opening up. I don't know that we're at full tilt and coming back with feeders back in from Mexico. I think that will be a slow process. And then, of course, you've got January 20th looming out there as well. So we shall see what happens if indeed tariffs go on. And if they do, what type of retaliation on tariffs the countries impose on U.S. goods.
Hogs would be impacted by the tariffs that you just talked about, but let's talk about the hog market because we've moved through most of these key moving average support areas. The funds are liquidating. How much lower do you think we'll go?
Well, the funds are still long, about 103,000 contracts coming into this week. And if you take that, it's been up to as high as 130,000. So they're liquidating some, but 103,000 is still a huge number of length being into that market. Yeah, we've had a correction. And yes, we did pull back to about a 38% retracement of the entire move. So maybe getting close to some on the technical side, maybe seeing a bottom. And then there's a strong seasonal tendency that you put a low in this late, mid to late January, month of January, let's call it. And then we start to move higher after that. So we'll see. There's still been a lot of talk of health issues in here, pig numbers starting to get tight. But you are right. We are live off of about 25% export business of all the pork produced gets exported, 25% of it. That's a big number. So the last thing you need is somebody to throw some Mexico throw some tariffs on U.S. pork. That would make things tough. Not only do you have a tariff there, but you got the strong dollar. It makes it pretty difficult to have additional business in that type of an atmosphere.
No doubt. Thanks so much, Mark Schultz, Northstar Commodity. That is Markets Now.